Hi everyone, welcome back to the channel. Today we're diving into the latest developments in US crypto regulation, market milestones, and some big moves from the government. Let's get started. US federal banking regulators, including the Federal Reserve, OCC, and FDIC, just issued joint guidelines on how banks should handle cryptocurrencies for customers. They emphasize that banks need to assess crypto custody risks with the same caution as any new product, focusing on cybersecurity and governance. This isn't about new rules, but follows previous clarifications from the Trump era, which opened the door for broader bank involvement in crypto. Plus, with new crypto-friendly officials like OCC Chief Jonathan Gold, the momentum is clear. On the legislative front, the US House just passed major crypto bills. The Clarity Act, with a 294 to 134 vote, sets out oversight rules and requires disclosures from crypto firms. Then there's the Genius Act, which mandates stable coins be fully backed by US dollars and regularly audited, passing 308 to 122. It's heading to President Trump's desk soon. However, the Anti-CBDC Surveillance State Act narrowly passed, blocking a digital dollar. The Clarity Act now moves to the Senate for further debate. Bitcoin has hit a huge milestone, becoming the fifth largest asset globally by market cap, surpassing $122,000 and a total market cap of over $2.4 trillion. It's now behind gold, Nvidia, Microsoft, and Apple. This rally is driven by over $16 billion in US ETF inflows and positive policy signals. Other cryptos like Ethereum, XRP, and Solana are also climbing, cementing Bitcoin's role as a macro asset amid a changing financial landscape. Despite a 2021 ban, 55 to 65% of global Bitcoin mining still traces back to China through hardware, capital, or expertise. Chinese firms like Bitmain and Canaan, which produce 99% of mining hardware, are expanding into the US to dodge tariffs. While the US has increased its share of mining, many major Chinese players have moved abroad. Fully decoupling from Chinese mining tech will take years of investment. And here's a big one. President Trump is reportedly preparing an executive order to allow cryptocurrencies, gold, and private equity into 401k plans. This could open the door for trillions in retirement funds to invest in digital assets, marking a major shift in US retirement policy. It follows recent moves by regulators to relax crypto restrictions in retirement accounts. Now let's take a look at the economic indicators for this week. Starting with inflation, something we all feel directly. The core CPI, which excludes food and energy, came in at 0.2% month over month, slightly below the forecast of 0.3%. That suggests some cooling in underlying price pressures. Good news for consumers and potentially a signal for the Fed to ease up. But the broader CPI year over year was 2.7%, a touch above expectations, showing inflation isn't gone just yet. And the monthly CPI matched forecasts at 0.3%, suggesting prices are stable but not receding. Now for the PPI, or Producer Price Index, basically what businesses are paying. It came in at 0.0%, below the expected 0.2% and down from 0.3% last month. This is important. It shows cost pressures for businesses are easing, which could eventually mean lower prices for consumers. When we look at crude oil inventories, we saw a massive drawdown of 3.86 million barrels, far more than the expected 1.8 million. This suggests strong demand or tight supply, which might put upward pressure on energy prices going forward. Despite inflation, consumer spending was strong. Core retail sales rose 0.5%, beating the 0.3% forecast. Even broader retail sales grew by 0.6%, smashing expectations and bouncing back from 0.9% decline last month. This points to resilient demand and a confident consumer base. Moving to the labor market, initial jobless claims were at 221,000, below the expected 233,000. That's a tight labor market, suggesting ongoing strength in employment, which continues to support economic stability. And finally, a big surprise from manufacturing. The Philadelphia Fed Manufacturing Index jumped to 15.9, way above the expected negative 1.2. That's a strong rebound, showing a big shift in business sentiment and factory activity. Next week, market attention will be focused on key economic indicators and earnings reports, including existing home sales, initial jobless claims, crude oil inventories, S&P Global Manufacturing and Services PMI, and new home sales. Meanwhile, several major corporations are set to release their earnings reports, including Verizon Communications, Roper Technologies, NXP Semiconductors, Equifax, the Coca-Cola Company, SAP SC, Alphabet, Tesla, International Business Machines Corporation, and T-Mobile US. So what does this all mean? Inflation is still sticky but cooling in the right places. Consumers are spending, jobs are solid, and manufacturing's back. The Fed might stay cautious, but there's reason for optimism heading into the second half of 2025. That's it for today's roundup. Did you like this breakdown? If so, hit that like button, subscribe, and ring that bell for your weekly macro updates. Thanks for watching, and we'll see you in the next video.